Good morning, everyone, and welcome to the European crossover webinar. And we did see the yen, the dollar yen, going and move in higher and actually take out some stops and get above the 109 area here. We talked about that area being very key, and obviously that was aided and abetted with the S&P, which made its run. Take a look at this here. We're looking at 26.14 and 26.23, and that run allowed us and finally kind of backed. I think Steve was looking for 26.30, so it came pretty close. I mentioned there was some resistance right there at 26.23. We still pushed a little bit higher, and actually you saw the yen really hit the stops up in here, just get above that 109, even push almost all the way to this 109.27, and we'll take a look at that on the daily. We pointed that out several times this week. Almost make it right here to what we call the bias pivot, or the pivot, and a very key area here in the daily that we felt that in order for this market to stop a lot of people out would need to get above 927, and for some probably have to do it on 2 consecutive days. But we came pretty close, and we actually were, continue to put the pressure on. You saw the same thing also here on the Aussie yen. Looked like we're going to be confined. Then we broke out, and then we started rolling down, and once again kept on pushing a little bit lower. And we saw the dollar index. We'll take a look at that. There we go. Saw this going to push hard, pair back just a little bit, only to go in and push even further. Now, part of that might be dragged up because we're actually seeing the euro come back. Is a bit of a slide that we're seeing here with the cable. Actually, not even much of a slide. I guess I was looking at it on a 5-minute. Right now, we just turn around and jump back up a little bit. But the dollar index is still holding up very well here in this 96.10 area here. We had that as, remember, we had 96.08, and we just started to slide later in the day below 96.08. The 96 held. We came back again, paired down, and now we've actually pushed up a little bit higher. But at this time, this is when the euro actually took a dip down here. Right about 13.75, maybe just a hair bit lower here with the euro. And they've been struggling to get above this 114. We'll see if maybe you can see this dip down here almost at 13.75. Actually, beyond 13.75, almost to, it looks like we made it here to about 13.71. So we see, yeah, there it is, 13.71. We're trying to push up a little bit higher. The dollar itself is still holding above this 96 here. And one other market we wanted to reference real quick is continues to be the gold market. And we've talked about this, and we're still holding up here, folks. And, I think people are looking once again, as I mentioned yesterday, for a bit of a stall and a pullback, and we're going to slide back. But, I keep referencing this, and this reminds me, it's not the same setup, but it reminds me back, with the dollar CAD, and when we had the employment numbers, and we saw the thing shoot up and then finish really very low on the day. Not this last employment report, but the one before that. And everybody thought that the dollar CAD was going to slide then. And when you looked at the weekly chart, even though we had moved up higher, we paired back quite a bit on the day. Actually, I think it almost looked like a shooting star, if I remember correctly. But when you looked at it on a weekly, it was still above the prior week. So we had that momentum still going with it. Well, you're seeing the same thing here. People have been, begin to look for a move or write the epitaph on the gold market for a rotation lower. And when you look at it on the weekly, that's when it gives you some perspective. And I'm not a person that looks at a weekly, but once again, if I said it the last few days, I'll say it again. If someone was long and they're holding and say, look, I'm not going to get out until I finish lower than the prior weeks. Well, you're still not seeing it. You see what I'm saying? Now, I'm surprised we still haven't pushed up above 1,300. But then once again, we have the equities have had, a very good move here when we put this in context. Go back in here. There we go. There we go. The move that we've had back here in the equities, and look, we've rallied. I mean, way further than I would have thought. When we go back to that, and you're thinking, when you look at this in a perspective with the gold market, you'd have thought gold would have pared back at least some. Gold's still hanging up near these highs. So what's going to happen when the S&Ps, if they do, obviously you can't foretell the future, but you would think that we would pare back. Earnings season has also helped, elevate or push the S&Ps higher. So what the heck is the gold market going to do when we actually do start to slide back? And as I mentioned, once again, if you look at this on a weekly, anybody that's held this on a weekly, they're still up. So there's not a reason yet for them to go in and say, you know what, until we close below the last week's close, that's when I'll look to close my positions. I'm just saying that'd be the thought of someone that was a momentum trader from a little bit longer term basis, and they haven't been proven wrong. So once again, like I said, and then this is in the face of the dollar index being above 96. So what's going to happen if we do go on and slide back? Once again, one thing you can look at is that we haven't given back here. There's been a couple of little pullbacks, but we still haven't given back. So really the door's open for us to, before I was looking for a move up to here to this 1304, but if we do finally see, a bit of a dollar pullback, we'll probably blast right through there and take us up here to 1323, as well as this is holding up. Well, we'll go on and quickly move into the morning bid and see what the news is. After PMA won a confidence vote last night, as expected, attention will now focus on how opposition leader Jeremy Corbyn plays the next few days. Today, he'll give a speech in southern English town of Hastings. Interestingly, the site of the 1066 military defeat, that marked the start of the Norman French conquest of England. Backbenchers in his own Labour Party are meanwhile looking to seize the moment to push him towards the back of a second referendum on Brexit, something he promised to do once the general election was off the table, as it looks to be now. They hope the effort could bear fruit as early as next week if they manage somehow to get the debate on a fresh vote onto Parliament's agenda. But Corbyn himself is taking a different tack. Boycott May's talks to reach a cross-party consensus unless she says the prospect of no-deal Brexit is off the table, something she's unwilling to do. Corbyn must be still hoping the failure of the cross-party efforts will be blamed on May, and things will eventually come around to a general election, and there'll be some tense conversations in the Labour camp in the coming days. German Prime Minister Olaf Scholz is kicking off a visit to China aimed at convincing Beijing to opening its own economy for foreign business in its own interest. This is a story that's actually garnered a little bit of strength or more attention or more drive. I saw this a few days ago. I was thinking about, with Trump, in his bit, and I saw Germany was thinking the same thing. They're thinking, hey, look, China needs to be opening up its markets. We're not going to sit around and put up with this. So once again, it looks like that might be, a little bit of a playoff of what the stuff that Trump was trying to do. And certainly this has been garnering some attention over the last few days. China's been crucial in Germany's recent expansion, sucking in Germany's cars and industrial goods to create the infrastructure that's allowed to grow into the world's second largest economy. But the export boom helped by the euro, replacing the stronger Deutsche Mark, is fading as China moved up the value claim and innovates faster than many German firms. December inflation for the Eurozone due this morning is expected to show prices pretty much flat for a year-on-year of 1.6%. Moving on, about the UK politics, we already covered that. And let's see. Also, the U.S. government shutdown is also starting to grate on markets. And actually, there was a story earlier in Reuters saying, hey, they don't care. Well, I guess that they could say that when we saw the S&Ps move up. But it says it's starting to grate on markets. The New York Times reported that White House advisor Kevin Hassett has indicated that the U.S. quarterly growth will be hit by 0.13 of a percentage point for every week the shutdown lasts, higher than previous estimates. After eking out small gains on Wednesday on some decent earnings, big U.S. banks, Goldman Sachs and Bank of America, stock futures were up 0.55% overnight. Shanghai stocks were down 0.4. Sterling stayed firm despite the Brexit impasse, and UK may survive the confidence vote in Parliament. Let's see here, and let's see, that's going to be about it here, and we'll move on quickly to the Aussie dollar. The Aussie dollar and New Zealand dollars held near 1 week lows on Thursday. The Antipodean currency started the year on a firmer footing after a battering in 2018, but heightened anxiety, a protracted Sino-U.S. trade war, worrying data from the Singapore showed that city-state exports plunged the most in more than 2 years in December, in a sign of increasing strain in global trade. As far as the New Zealand dollar, there's some suggestions that weakness might owe something to position in front of next week's important fourth quarter CPI numbers and the risk of weakening numbers, said Ray Trill. Australia and New Zealand economies have been expanding at a decent pace, but there are hardly any signs of inflation, with the wage growth remaining strong despite labor markets in both countries. This was key as far as the pace of wage growth. I know with the RBA, if they were looking to go on and maybe eventually raise, and we're just not seeing it at this time. Quickly moving forward, the dollar steadies. The dollar took a breather on Thursday following its recent strong gains. The U.S. currency held on to gains against the euro. Of course, basically we made a move down to the euro down to 13.71 before starting to pull back a little bit. Data this week showed Germany barely avoided slipping into recession into 2018 second half. The dollar was trading basically flat against the euro at 13.88. Catching investors was a report that Wall Street Journal that federal prosecutors were investigating Huawei Technologies for allegedly stealing trade secrets from U.S. businesses and could issue an indictment. Well, we know how that story had played out. There's a lot of speculation that we've seen ahead of the rate hike cycle, and many people are even talking about rate cuts this year, said Bart Wakabayashi. The media is going to be the message from the Fed, plus, of course, their action, if we're assuming that the market is still long dollars. Businesses across the U.S. have become less optimistic in recent months, and said the Fed on Wednesday on a report on the economy that supports Chairman Jerome Powell's pivot to more patience. The pound was stable after a no confidence vote. Also, May's Plan B is due by Monday, and market assumes there'll be an extension of the Article 50 to exit date past March 29. It's unlikely there'll be big changes to May's plan, so Parliament is likely to oppose it as well. Against the dollar, the cable is trading basically flat at 28.72. May said late on Wednesday, opposition Labour Party had yet to discuss a new approach to the Brexit with her and urged politicians to put self-interest aside to break the impasse. Let's take a look. And also with gold, talking about gold here, as we just recently referenced, gold has gained for 5 straight weeks. We've been talking about that, but prices have been hovering around a $20 range for the past 2 weeks and unable to break through the technical resistance of 1,300. Gold's recent standstill still seems to be reflecting the clouded U.S. growth outlook and uncertainty about the path for Fed monetary policy. Markets seem to assume the Fed's rhetoric shift away from the hawkish pre-commitment has inherently dovish, but strong data flow recently suggests it may yet find scope for hikes this year. Well, I kind of think that's going to pause itself, and probably one of the reasons why we've been able to keep the S&Ps elevated, but only time will tell. And lastly, just a quick article. I don't think it gathers that much steam and makes a whole lot of difference, but just said recent dip in the Eurozone inflation and growth was anticipated, so it's not enough to unravel the expectations of an interest rate hike. Sabine Lautenschlager, the most prominent hawk on the ECB, said she's still looking for the possibility of a rate hike for this year. She said she wasn't going to adjust her thoughts until we see the projections past March. So just something just on the back burner. I don't think it carries that much weight. But it has said the ECB guided markets steady through the summer, but given the abrupt slowdown, few expect the most outspoken hawks to appear to see a move this year as realistic. So let's go on and quickly just catch where we stand here. We do have Eurozone inflation at the top of the hour. Also, we have U.S. building permits and housing starts, as well as the usual jobless claims. Also, look for see how retail sales does here. We may get a little bit of still a jump here with retail sales coming up. And let's see here. That's going to be it. So let's quickly move into the bias chart. I'm not sure why this isn't moving further. Well, yesterday we mentioned it's 14.40.45 here on the euro as being key. And we're looking at here on the, oh, no wonder. See, there we go. No wonder. This is 14.45, and boy, we are really struggling. We talked initially get the 14.22, but we thought we might be able to challenge that. If you remember yesterday, we were just not too far away from that. So the key would be 14.45 right in here. If we can get up there, and if we get a close above that, that was trying to offset the short-sided or the shorts a little bit, but we actually rolled back even further, came down to this 1380. The market's really struggling here. As I mentioned before, I'm not a trendline type of guy, but we're kind of doing the best we can to hold here. Not really see, at least on the daily, where we see a whole lot of support here. If you're looking straight across on the bars, we'll go in and take a look where we stand here on a 2-hour chart. Not seeing anything definitive, and for right now, it's going to be 14.22 for resistance now coming across here. You can see the importance of that. So we're actually going to rotate that lower. Let's go and take a look at it here on the 2-hour. Well, here's that 14.16. There'll be some resistance, but if they were not expecting it, but if they were to push beyond that, once again, I think that 14.22 is where you'll see some more actual resistance here. So we're going to go in and pen that as our resistance for the euro. Would really be more of an upside target if the dollar were to pull back. And we talked about this 96.08. Remember that as being a bit of a pivot for yesterday. And we're still hanging around there. We got above it. We pulled back. We held there, then moved back above it. Came down to around 96 into almost, I think it was 96.02 in the Asian session. Then obviously we moved back above it. Now we're just hanging around. Basically, it's working like a pivot, but once again, if we were to get below this and break, then the initial target, I think, would be that 14.23. And year's been rather interesting in the sense that, even past the Brexit vote, there just hasn't been very much movement in the euro whatsoever. Now, as far as support, we just about came right there. You can see that here. Well, that's 1371, and that's exactly where the market went to. See that 13,706. And it's held so far there. We're just going to stick with that 1371. Well, it's interesting as we come toward the end of the week. I don't know if they're going to try and push the dollar a little bit higher. So what would be the downside target? If we start to break lower, the real actual support, there'll be areas of support. We actually came in, you can see that right here at 1371, the market held. Actually be right there at 1350. Looking at cable, we had come down here, not come down here, but moved up here to this key level. We talked about that before. I think that's actually shown here on the 2-hour chart. This 2888, we flirted with this, and it's really tough for me. I can't get a good fix on this market whatsoever. I actually haven't traded cable in quite a while. I have certainly not over the last couple of weeks where we've seen a lot of up and down activity. I guess a case can be made. We got the worst of it out of the way, so if we read the news about Corbyn, if for some reason they were going to push this thing back and have a new election, a lot of people say that wouldn't happen. Obviously, I think Blake talked about that. We could even be at 132, 133. And I guess the market is just trying to right now push for, if we would not, we can get through this 2888. Well, short-term resistance is going to be right there, 2916. You can see that coming across. And that's what we have to go with, because if they do trigger the stops, and it doesn't mean they can't even blast some stops just above. If you're looking here where most of the volume comes in, right there, which would be 2950. 2950 is actually where they would, if the market would make a run to it, and where we would, we probably see quite a bit of stops here. I'm saying for anyone that's going to stay short and says, you know what, that's it. I don't want to get stopped out at 2916 or 2930. It'd be right here. Right there, you see the volume coming across here. It's going to be 29.51. We're going to give it some room here. And I don't know why I had that as bullish, because that's actually bearish. It may eventually change, but it's been bearish. I don't know why I had it marked that way. Support. Support comes in right there, 27.98. That's a long ways off, but the way this market trades, it's going to be 27.98 there. Actually, move it right there, 27.98. And we're just trading, and we're trapped in this very tight range here. Basically, was it 40 pips in a sense? And trading, you would look at this, you would think this is maybe a 30-minute or 15-minute chart. And God, these are 2-hour bars, and we're very, very quiet now after all the excitement we've seen over the past few days. We've gone into sleep mode here in the cable. We've seen the Aussie dollar just ease back just a bit from this run up here. We had talked about the importance of this 72.33 level. Well, we looked at some other levels, but this one was key that we're looking at on the daily. We actually nicked it a few days ago, and we were actually just biding our time. Actually, it looked like we might even try and push above that on the a couple of days back. But we've started to rotate a little bit lower, and we're still holding up relatively well despite some tough news coming out of China. But once again, we talked about, it seems like every day China announces a new stimulus. I don't want to say stimulus package, but something to go on and push this economy and help it along, whether it's opening up additional lending for small businesses. It just seems like it's been one thing every day after another. Today was the first day I don't see something where China's not announcing something. But we're still holding up. We've pared back, but it's held up relatively well in light of that. That's the one thing that's been supportive for the market. So where are we at now with the Aussie dollar? Well, we had 72.19 and 71.48. And the low was 71.47, well, 46.8. So resistance on a short-term basis is going to come in right there at 71.85. Now our bias chart support seems to have held today so far. I mean, coming into today, because like I said, our bias chart is for that day going into the next day. So we had 48. We got here down to 46, but you can see here, you see the top of these bars right here? That's where they came down to. You see that 46.3, and we had the low was 46.8. Although we had 71.48 as our bias chart support. You know, the only thing that's going to knock this is when if we start to see these S&Ps finally crack this 2600. So we're just going to move this just a hair lower. It sounds crazy, but we're just going to move it right there at 71.41 for now. To actually, it's just a touch bit lower here, right there, coming across 71.36 for right now. I don't think the wheels are going to come off the S&P yet, but we shall see. But at least initially, that would provide some support there at 71.36. Very close, but we haven't seen that much volatility in the Aussie for the most part. And I'm talking about, we did see some good movement in the Aussie yen, but you know, when you look over as to what we've experienced in the volatility, these things have certainly quieted down from there. But we're starting to roll over just a little bit, but it's slight. It's very slight. We'll go on and move into the Kiwi. Things have been a little bit different here in the Kiwi. If you look at it here on the 30-minute exponential moving averages, this has continued to, I mean, once we started to rotate lower, it's kept itself in check and still pushing lower. Let's see what we had our bias chart support here and see what we align things up for the day. Bias chart support here with the Kiwi, 67.17. We still hold up above that. Right in here. So although we've been on a good move here, now we're looking at here just on the daily. Things have started to rotate lower. Actually, again, if you look at this, and I kept these because I've been just keeping an eye and adjusting things for the 30-minute. I usually don't keep the exponential moving averages on anything but that, but you can see it really plays well. It's kept on that buy mode, and finally right there where we were kissing the line here, we still made one little push up here before it rotated lower, and it's kept itself in check. You know, any rally back has stopped at this faster moving average. Well, when we look at for support here, we're going to keep it there at that 67.17 that we had. And resistance. For right now, I mean, the market, I wouldn't say it's way oversold, but it could do a little bit of a rally back. But, you know, with the way that the China news keeps getting worse and worse, and we're really just continue to get a little bit more extra momentum, I think it's going to have a tough time trying to go and get back. So, this isn't that far away. That's my concern. But we'll go and put it here, using this basically almost as if it were to be a trigger, which is going to be 67.88. And let's take a look at where we stand with the dollar CAD. Well, we finally did make this move above 33, made it all the way back up to 33.09. Let's keep an eye here on the crude oil. One of the things we looked at yesterday, you had it look like a graystone doji on the 2-hour. Oh, I don't know. Maybe it was. I know that we're looking at it. It looked like because this is about the same time that the dollar CAD was pushing again lower. But I know that we had come up here. They had already pulled back from the 52.55. I don't know if it was on a 3-hour or what. I'm not 3-hour, but on a daily. But I know that we were struggling there at that 52.55 at the time. I don't believe that this was it, but that's. I don't believe that was it, but we did see the market going in pair, pull back just a little bit, not even that much, to be quite honest with you. But let's roll back in here to the dollar CAD. Finally, we're able to just go and push a little bit above these highs and make it up here to the 32.09-ish area here. I apologize, 33.09. And the dollar CAD, we had a resistance at 33.14. We talked about this on the 2-hour chart. And that's why we went with that level. We said we'd go to keep this at that level. Well, until it changes, it hasn't changed. So we'll go and keep the 33.14. Today's high has been 33.09. Support, I think it's pretty clear where support's going to be right here, which is going to be 33.42. 32.42. And we'll go and move on now to the dollar Swissy. Well, this has certainly helped the dollar move higher. Boy, look at this move up in here on the dollar Swiss. I got the euro up now to 114. Remember, we did have a low at 13.71. Well, the dollar Swiss continues to go on and motor along, and we had our resistance here on the Swissy, 99.02. So we're moving up ahead here. We're finally starting to break a little bit higher on the Swissy. I know that the S&B, they were mentioning about they're not worried about the decisions. Their decisions of other central banks were not going to impact them. So I don't know. That was from early yesterday morning. So obviously it's provide a little bit of extra juice on hand. We're certainly moving higher and continue to move higher. It's a matter of how much they can go and, I don't want to say squeeze this market back, but let's take a look at the fib and see what we might be, see if we can't get some confluence here or a target area. Well, we're right here at the 50%. right there at 99.23. And also you can see a nice little level coming across right here of touches. Now that's off of the fib, but you can see it coming right here across. You know, you would think this would take a bit of a respite here. And look, we're below the pivot here. Remember 96.08 is that pivot. Not much below, but we are a bit below it. Yeah, we're going to go with that 99.20. We'll call it 99.24 right here. If you look coming across here, see that right there? Actually coming in right there. We'll call that 99.29. 99.29 for resistance on the Swissy. And remember, 99.23 is the 50% of this move. So probably look for the Aussie to pair back just a little bit here. Although, despite the good move, it still remains bearish. So it's going to be 99.29. Support on the Aussie comes in right there. 98.73. It's been a slow, arduous move up. It's just slowly, but it certainly had the momentum here. But I would look for the market to tire out a little bit. We've come up to the 50% here. Let's now go on and move in now to the dollar yen. Now, we started off the show talking about this, and we've mentioned this a couple of times during the week, was this 927, the pivot. You know, a lot of big banks looking at this trade as a trade that's going to, I don't want to say their theme trade, but if you're looking at, I know that I think it was Morgan Stanley I mentioned about a couple of days ago, they had a report out, actually garnered a little bit of extra attention across mainstream media, which is they're looking for the market, I'm talking about the equities, to go back to the year's lows again, or this last year's lows. And I think that's exactly what a lot of big players are looking forward to. Maybe not back to the new lows, but, you know, a move pushing equities lower, maybe not necessarily all the way to lows again, but probably get another, you know, downwind. And that would open the door for the dollar yen after this big break here to come down. Now, remember, my medium range target is 676 here. But one of the things we were looking at yesterday is that this market continued to push higher and really was squeezing people when should they actually made it up to 920 when we look at it in the U.S. session. Let's see. Actually, I didn't mean to do that. Doggone it. Oh, there we go. We actually made up all the way here to 920, okay? And then we paired back. We made another little run in Asia. I actually did a little bit of just scalping around here in the dollar yen. I mean, I was in the Aussie yen. I posted that in the Asian session. I was able to go in and get out of that position I put on. I think it was 20 pips. Actually, if I had held longer, it'd be in better shape right now. But, you know, I feel more comfortable trading the dollar yen than the Aussie yen. It seemed to be reacting better anyway. So I just kind of scalped around here during the Asian session. But once again, we actually came back up here just above 9, and we've kind of started to slide back a little bit here. There's nothing here on the 2 hour that I can say you can really hang your hat on, other than you look at this resistance, which is really no change. I'd even mentioned that the day before, which is at 908 when we were starting to push higher, and we just had come up to 109 and said, well, it's 109.08 is the one that's going to try and push us to challenge up to that 927. So yeah, I guess for right now, it's actually 908 if you're looking at for resistance as the key area here. I mean, there's shorter term is really 897, almost prone right here. I think we're going to put that right here, which is 898, because that's what's going to trigger to us to get the market spooked and try and push back and challenge these highs. I'm not so sure that's going to happen so easily, especially with the S&Ps. They're starting to pare back. Remember, we made it up to, what was it, 26? I know I had 26.14 and 26.23. I think they made it up to what, like 26.25 or something like that. So it might be a tough road to hoe for the yen to jump back much further, but we're going to put this as 898 for the day's resistance. I think any moves from there is going to be well faded. Really, at this point now, after the way I think you would look at it, depends on your time perspective. They really put the bear's feet to the fire, and now those that had still hung in there may have got a bit of a reprieve now. And on a very short-term basis, I think what you're looking for now is, can we get that momentum pushing lower? Well, I think he's on a very, very ultra short-term basis. Here's one thing I think you want to focus on here is you look at the bars. There we go. So I was talking about where we can get some momentum. And now finally, if you're looking at, you're a very short-term trader and you were taking pot shots up in here. Now I think you can say, okay, now we took out, you see here, this break here takes out, we finally broke above here. Remember, we were hanging around here. Maybe this market is finally going to tire. So we rally up here. Where do we rally to? 846, okay? And the market's hanging here. Well, this break here took us past that 846 shortly after we got up as high as 920, okay? So now you're starting to see the momentum here start to change. And I'm saying momentum as far as we may start to, now we'll look for the next move to break lower. So I think here, once you've taken out this, these two H bars, but really more importantly, the market was stuck in here and it looked like, okay, now we're finally going to break lower. People come in and stepped in, myself included. Okay, we're finally going to try. This one took a lot of people out, this bar, okay, right there. So where are we now? Well, we just came back and took out that bar here. Took out that bar, all the support here. So I think now the market is going to look to now people that, let's say if they were fresh in the position, say, you know what, now I want to go and start selling this thing. I think I might have the wind at my back now. So let's go and move into a 30-minute quickly. Now you look at the 30-minute exponential moving average, which has been on a buy mode here, okay? It's been on a buy mode since 853, okay? Now we've rotated into the sell mode. Now you're looking at the market, and people are going to say, hey, I'm willing to take on the market now. So now we'll go and bring up that same setup, not setup, but trend as far as, let me show you right here. So now moves back to 890 are going to be faded. I think that people are going to say, boy, any moves back there, I'll be happy to take it on. Because now you've got a sell signal here. So you're looking at this here, the way I look at things. And I think it is significant. Here's the market. Okay, well, we're just hanging around here. Now we're finally going to break. Although we were on a buy mode, if you look at it, I usually don't use exponential moving averages for the 2-hour, but they certainly had the momentum going, but a lot of people think, okay, they're going to break. And this right here knocked people out of the box. Right here. Here was that little high coming in here. When we broke above here, people were saying, I got to get out. I have no choice. I got to cover my shorts here. So they did here. And of course, we continue to move higher. And what happened here? This bar, after going to 920, this bar takes out these areas here. That's significant. It is significant, and that's on a 2-hour chart. So we did find some support here on this slow moving average. Okay, fine. But now where do we stand on the 30-minute? Okay, we got the buy signal. Now I do use the exponential moving averages for the 30-minute. So you get the buy signal here. So you really don't want to be fading this. Even if you're a bear, you just don't want to be short. If you're saying there's no way I'd be long the dollar, okay, fine. But in a situation like that, you just don't want to be short then. So this thing runs and runs and runs and runs. Finally comes back, finds a little bit of support in here. This is where I was kind of scalping around in here. We come back up in here. This was still during the Asian, coming into this Asian session. Come in here, and then we finally rotate. Here's where we get the sell signal. Don't forget we broke before, so really it moves back to 890 that you want to be fading for the move lower. If now we finally got the ship turned around. Anyway, enough of that. I've spent too much time here on this. So support, short-term basis is going to be right there. It's going to be right there, 861. And that's just short-term support, so hold on. Very short-term support. Let's go and move into the dollar index. We're running out of time here. Well, looking at it on the daily, the key thing was, remember that 95.65. We've talked about that just over and over ad nauseum, but we were able to defend it. We got above it. The door opened higher. 96.08 continues to remain a pivot here. We talked about that yesterday quite a bit. Here we are. There's that 96.05 to 38%. Here's the pivot I was telling you about. We're still holding up in here, and we mentioned a few days ago about this whole story about it continues to be still there, at least on the back burner, the dollar shortage. Well, the thing is, every week until proven different, they keep pushing this dollar back up, so it's hard to go in and fight it. And as long as it well defended that 95.65, so we're above it now. Maybe we'll be able to pair back, but right now it's all about this pivot 96.08. That's not resistance. Resistance is going to be right there at 96. Well, we have the 15 seconds. We'd be right there, 96.17 for resistance. $95.65, yeah, that would continue to be support here. $95.65, this key area here. So if the market rotates lower and we start pushing, this is where they would step in, try and defend it or cover shorts. We may not see it if we were to rotate lower. We may not see that till, tomorrow if that was the case, but that's the area they would come in. I'm still keeping this range. I'm not really ready to say this thing is bullish, but it's almost on that cusp. Obviously, we finished the week around 96.20. It is going to flip it to bullish. Let's go and quickly move into the gold. I've been saying the bears need to be careful. They're right. Keep writing this epitaph on the gold, and it just keeps holding its own here. Resistance here. We had that. I think we had it at 96. We're actually going to move it up to 12.98. Actually, I don't know. Okay, we had it 12.93. We're going to move this up to 12.98. Once again, I'm going to reiterate, if you look at this on a weekly, people have been thinking, okay, we're pulling back, we're going to pull back, we're going to pull back, and look at it on a weekly. Each week is subsequently higher. So, you got people that were, after this huge move down here, and people were thinking, okay, we're finally going to start to break. So anybody that bought, as long as they're looking at don't bother me until the close on Friday. Hibernating, looking at it a different way, a hibernating bear, although not a bear, hibernating bear, just don't wake me up until Friday each week. And then I'll decide what I'm going to do with my trade. And until proven wrong, these guys are not being proven wrong. They're still getting paid. Every Friday, these guys are getting paid. But in the short term, people keep writing the epitaph for gold. And you know what? It's just not happening. I mean, I thought it might rotate, thinking each time it started to pair back, okay, look, and we saw this, remember? little gravestone judgment. Go, okay, well, I guess now it will start to go and pair back. We'll slide back. I even was saying, hey, look, yeah, but I think there'll be some good buying if we do pair back. Well, obviously we're going to hit some stops if we come lower, but there'll be some good buying. 1267 here. Um, we're not even pulling back, and we're actually pushing even higher. And this is on the when the S&Ps were going rallying and continued to rally. I mean, they're still above 26. And the dollar, look at the dollar above 96, and gold's just not pairing back. So what's going to happen if the dollar does slide back or the S&Ps pull back? Gold's going to rip higher. I was looking for this move up here to 1304, but at this point now, I'm supplanting in this 1304 if we hit these stops up to 1323. You see that coming across here, right there, 1323. There might be a pause at 12, right there. See there, 1312. But I think we're going to make a quick move there, and this thing just looks like it just wants to, like a cork, it just wants to pop. Support. This thing just doesn't want to pull back much, but we'll go on and give it some room. I don't think that's going to happen. Let's go. I mean, unless the dollar tries to rip up, but support's going to be 1288. And actually, you can make the case for the support actually coming in right there. If you're short-term trading at 1290. Let's go move into the 30-year bond. So we had resistance at 45.23. Well, the high's been 45.24. I think with S&Ps, we may be able to start pushing a little bit higher the way they're acting. So resistance is going to come in right there at 45.29. We'll give it just a little bit more extra room. Although if S&Ps will really start to drag lower, we'll get past that without too much trouble. But it's going to be 45.29, which is also the 23% of the move. And looking at support, well, support on a very short-term basis is going to come in right there, 45.03. And then moving on to the bonds. We are above that, this breakout area here, the 64.10. 64.42 is a long ways, but that is resistance here, 64.40. Support's going to come in right there, 64.06 on the bonds. We had 817 and 918. Well, obviously we got that little extra boost with the S&Ps pushing higher, but my concern is the S&Ps may be putting themselves in a situation. Look at them. They've broken 26 now. Let's take a look at this. Nothing here yet that I see. I mean, I could say other than that we've taken. It's not as funny is that when you look at these 2 hour bars, there isn't anything there that stands out significantly to me. The only thing is right here. Well, the 2601. See if we can't get a move, but any moves back up in here towards 2607 are going to be faded. That's going to be a key area right there. Look at that coming across right at 2607. So now looking here at the DAX. At least for now, we'll go with 807. Definitely already obviously gone into a sell mode here, but resistance will come in. Well, we could get the bounce back if we were able to get the spruce up to back to 2607, but I think that's going to be a good area there on the spruce. But it's going to be right here at 8, we'll call it 889. And on a short-term basis, like we mentioned on the 30-minute, you can see here, it's actually holding up well. If you think of the S&Ps is just already at this 2600, but any moves back to this 889 are going to be, I think, well defended, and people are going to be looking out for opportunities to sell into this. But that concludes the European crossover. I'll go on and get the bias chart posted, and good luck trading.